Good afternoon, evening, morning to everyone joining this session, and welcome. This session is titled Examining Evidence, Creating a Responsible Digital Finance Ecosystem. And everybody has heard today from the keynotes and previous sessions about growth in tech, Web 3.0, the opportunities that it brings, the need to focus on impact. Over the past year, the industry, I think, has become a little bit more aware of the danger of rising consumer protection risks, and credit goes to CCAP for raising the alarm when they found 66 new types of DFS risks in their landscape study. We've also heard the term responsible in various contexts today and at various fora over the year, including the Responsible Finance Forum, which we convened earlier in the year. What we hope to uncover in today's session is an exploration of what a responsible DFS ecosystem means and evidence of where it might be working and what we can learn from these examples. So we have a group of, a group that represents stakeholders, which are, brilliant in their own right. So there's the Consumer Associations group, and Sheila will speak to that. We have Nitin speaking about industry associations and the work that happens with them. And then Simone to speak about soup tech tools and working with supervisors and regulators. My colleague Eric and I will be co-moderating the session, but it's very much intended to be a podcast style interaction. So while we can't bring the audience in, I would encourage everybody logged in to use the chat function to ask questions, and we'll make the wall between us porous, even if we can't break it. Eric, I want to hand over to you since you and Gerard first came up with the term responsible digital finance ecosystem. So perhaps you could provide thinking behind it and what you envisaged by the term ecosystem itself. Who does it include in a world that is getting rapidly digitalized? Who should it include but doesn't as yet?
Thank you very much, Jayshree, for inviting all of us to this session. And before I describe what we mean by this responsible digital finance ecosystem, the RDFE, as we like to call it, just a couple of reasons why we raised the alarm and thought that we needed new solutions. As you all know, there's been a lot of good progress made in the last few years in terms of improving consumer experience and protecting consumers. In fact, the latest World Bank FICP report is showing some really interesting progress in terms of regulators and supervisors adopting frameworks for consumer protection. So we're seeing some progress on this side. We have 78 countries, according to the same report, that have pulled together some financial education programs with more than 250 providers of financial services that are involved with the SPTF consumer protection pathway. About 20 mobile network operators are certified with consumer protection. So we're seeing a lot of progress, and there are also, the OECD has been very active in developing principles and guidance on consumer protection. But in spite of all this, as you were saying, Jayshree, the evidence that we collected in a report produced last year showed that not only you have more than 60 DFS consumer risks, but the scale is growing, and the scale is growing faster than the innovation in some cases, in particular in the area of frauds and in the area of data misuse, consumer data misuse. We're seeing growth, and in some cases, this growth are really quite scary. In fact, we conducted 2 national surveys in Côte d'Ivoire and Senegal in the past year. We found that about 90% of consumers had issues and faced risks while using mobile money, for example, in both countries, about 90%. And then we found that 40% of them had lost money, 40% of users losing money in when transacting digitally. So the combination of these global results and national level results make us think that we need a new approach. So what do we mean with this new approach of responsible digital finance ecosystem? First, I think you asked the right question about who is the ecosystem, and that's one of the origins for developing this concept, is the fact that we find that the solution for ensuring a good outcome for consumers has to come from many different players working together in the ecosystem. So in the previous, there was discussion on responsible AI in the previous panel, and there was a lot of emphasis on this collaboration. So I would say, this is one of the bigger elements in this ecosystem approach, is how to identify all the key players who are actually influencing consumer protections, responsible finance for consumers. So, for example, consumer associations that Sheila is, represents here, are increasingly involved in this ecosystem. So that's, one piece. But also at the regulatory level, we're seeing that a lot of new actors are appearing, in particular in the area of data protection. And, one of the things that I argue is that there is a need for much more connection and collaboration between financial sector authorities and data protection authorities. Because if you take digital credit, which was also discussed in the last panel, where there are, huge consumer protection issues, you're not just dealing with the financial service, you're also dealing with consumers' data, which is very badly handled in some cases, as you and I know, Jayshree, because we did some research in India on this topic. So, so what we mean by a responsible digital finance ecosystem is first, much more collaboration among all these new actors, all these fintech also that are entering the market, all these different regulators increasingly involved. We also mean customer centricity. And this is a topic that has been discussed, a lot in the past few years, but how can we apply customer centricity at different levels of the ecosystem? How can regulatory frameworks be more customer centric? How providers, practices and services can be more customer centric? So these are, this is also an angle that we like to take. The capability is also something important. We notice that there are a lot of gaps in the digital finance ecosystems in terms of resources and capability. So this is one angle also that we want to work on. And then another element is the commitment. We feel that this ecosystem cannot operate in a responsible manner without, more commitment. And there are ways to build commitments. I think we'll hear about this, from Nitin and from Sheila, but there are ways to develop commitment. So these are 4 C's, capability, customer centricity, collaboration, and commitment. Now, how do we pull this, how do we put this on the ground? How do we implement this? That's what we're working on next. And what we're doing at the moment is we're thinking about, what are the key pieces that need to be put in place, and how do we help the financial sector authority, who is at the anchor for this work, in our opinion, how do we help them to pull this together with different kinds of tools that already exists and tools that we need to develop, whether it's, assessment of consumer risks in digital finance, institutional assessment, gaps in the ecosystem. So the assessment part, we have lots of tools that already exist and we may need more. How to develop roadmaps, select priorities, and how to implement. So we want to have everybody on the deck and work together. And, we'd love to hear also in the chat from other people what they think is needed for this ecosystem to work. So I hope this summarizes it okay. Feel free to ask me other questions on this, but that's where we are.
I think I am going to come back to you, particularly on the key pieces to be put in place, because I think that there's a contextual element to it. It differs from market to market, but I want to, use one of the C's and turn to Sheila, which is customer centricity. And at the heart of creating a responsible digital finance ecosystem, like Eric said, is the consumer. They have to benefit from this. You've been running the FAIR Digital Finance Accelerator now for a while, and its core purpose is to elevate voices of low-income consumers through associations. So explain to us how that's moving the needle towards fair outcomes. And do you have now concrete examples that you can share with us?
Yeah, thank you, Jayshree. And just building on to Eric's submission, the Fair Digital Finance Accelerator in itself is a core example of how different players can elevate the voice of consumers. It was co-founded with CGAP, but also funded by Bill and Melinda Gates. which shows the role that funders can play in actually ensuring that the consumer voice is elevated in spaces where we are looking for solutions that support consumers. And I'm happy to say from the last time we were in this forum, the number of the membership has grown from 45 to 65 in terms of the consumer associations that are now actively pushing for regulation or solution changes within the digital finance space. And these have ranged from reviewing of financial consumer protection guidelines, researching and making recommendations for businesses or regulators on how to design policies or solutions that are consumer-centric, looking in some cases particularly at women, at young consumers, and oftentimes at other excluded consumers. But we've also seen a lot of innovation coming up with consumer association designing new tools to monitor complaints, leveraging social media to see how they can be able to capture input that would otherwise be lost. And also looking at a big number of the membership, over 60%, undertaking consumer empowerment campaigns around digital awareness, around financial literacy. And this is covering a range of issues and risks from frauds and scams to digital lending and issues that are arising out of that, to AI and the dangers around that, and other algorithmic issues that consumers may not be aware of that affect them at the front end. And some of the interesting examples this year with collaboration from other players have been, for example, the consumer associations in Uganda in collaboration and partnership with other INGOs like the UNCDF, the support they provided in reviewing the existing legal and regulatory frameworks around financial consumer protection. These were already existing from 2011, but as Eric did mention, things are moving quite fast and sometimes the regulations are not catching up. And this was really useful in ensuring that consumer needs are incorporated within, particularly bring out the element of financial ombudsman, ensuring the redress processes as things change from, let's say, previously where we had traditional banking to moving to mobile money, to moving to even other digital apps, that they're right mechanisms, or that the gaps in policy or redress are actually filled, and there is a clear mandate on how those go about. But we've also seen a lot of input from our members in India, including CATS, Consumer Voice, and others who have been very, very key in coming up with recommendations around the data protection bill that was later passed into law recently. So a lot of input due to the open review or review of those existing or upcoming laws, where consumers have an opportunity to actually provide feedback, are always very critical to ensure that regulators are thinking about the issues that policy could have on impacting consumers. But also very interestingly, we did have a member in Mexico who's also part of the accelerator that reviewed over 100,000 consumer complaints in digital finance, which was way above some of the formal statistics that were shared. And we did see that there were new arising issues around consumers complaining about interest rates on credit through credit apps, other abuses that arise around harassment, and also a gap in legislation in terms of where do consumers go when those issues happen. We did have a lot of that, and also plenty of convening opportunities convened by members in Rwanda, in Yemen, in India, in Fiji, where we did see consumer representatives taking a key role in ensuring that we have the businesses, we have regulators and the consumer associations themselves using data that they collected to inform policy recommendations or business solutions. And some of these have been around buy now, pay later products. Others have been around hidden fees and lack of transparency, especially when it comes to mobile money pricing for most of the countries within Africa. And others have been around pension schemes that may be sometimes structured in a way that does not support certain populations or excludes certain vulnerable consumers just because of who they are, whether it's women, whether it's people who have particular illnesses, whether it's by age. So we've seen a lot of work coming out of this, and this is also being incorporated in regular engagements with regulators. But speaking of that as well, we've seen more regulators taking a key role in ensuring that consumer organizations and representatives are incorporated in their discussions around policy. And we've seen this with the International Association of Insurance Providers, who have been very keen to have representation of consumer associations at a high global level, but also regionally and nationally in the review of their upcoming plans, strategic plans. And the OECD, as usual, is always very cooperative. But we're also seeing businesses listening. For example, for the issues I did say around predatory loan apps, we have seen businesses like Google come together with regulators, let's say Nigeria, in Kenya, in India, to come up with guidelines, interim guidelines to ensure that any businesses that are onboarded on the third-party platform are licensed and have the consumer's interest at heart. So these are some of the issues of the ways we are seeing this come through, but there is still a lot to be done. But compared to where we were the last Financial Inclusion Week in 2022, we've seen a whole lot of progress across different geographies where we have consumer associations represented.
No, and it sounds like there's a lot of work that's been done. And you actually touched on 3 of the C's that Eric mentioned, because there's customer centricity, there's capacity building, and there's collaboration. And I don't know if I missed, an example of the 4th C. But I want to come back to Sheila on later in the discussion on how you might measure the impact of all of this work. Is it through the number of convenings? Is it through the influence that one has had? Or is it in, reducing similar kinds of consumer complaints, or some combination of all of this? But turning to you, Eric, because I do want your comments on, when we think of the RDFE approach, what is the principle that potentially comes to mind from what Sheila just shared? And are there other examples that come to mind which might have used 3 C's or 4 C's or some combination of those?
Yeah, so you were right about the 3 C's that you mentioned, because they were all definitely very well illustrated, by Sheila during her sharing of experience. Now, the 4th C is the commitment. And if there was a principle for me, and it's funny because I'm thinking like commitment, I don't know if it's a principle or not, but I think that what is very important for this to work is to have the openness from both the consumer association and the regulator. And that's something, Sheila and I have discussed several times, but this is very difficult, because it is critical, of course, to involve consumer associations, because the consumers need to be at the table if we want to have impactful regulations. At the same time, the regulator is not always used to that. And on the other hand, the consumer association is not always used to speak with regulators, because maybe they have a more, how can I say, advocacy language, whereas the regulator, tend to have very serious type of language of communication. So it's a difference of style also, between these actors. Interestingly, by the way, talking about style, so the principle would be, the openness to learn from each other. That would be the principle, and the openness to cross new boundaries, so to speak. I think this is critical. I was on a panel at an FMO event a week ago, and there was an assistant governor from Egypt who was himself a former banker. And he was explaining also how it's critical for the regulator to have people like him, in a central bank, so that they can also understand the perspective of the providers. So yeah, I would just say that. But one thing I also wanted to comment on, which is very important, that Sheila mentioned at the beginning, that you need resources. So that's part of the capability to some extent. You need some resources, and the funding from the Gates Foundation, is pretty instrumental in this project. And we need more of this, because there are a lot of gaps and a lot of capacity building needed for consumer association, but also for regulators and supervisors and other actors in the ecosystem.
I totally agree.
You wanted to have another successful example. I'll just give a very quick one, which happened in Russia where the Federation of Consumer Associations actually did some mystery shopping and found out that there was some discrimination on certain insurance products against pregnant women. And they then, pulled the data, brought it to the regulator, and the regulator changed the regulation with some impact later on. So this is another example, and we have a few of these that we can share, but I think this can be a very powerful, collaboration.
Yeah, and fascinating example from Russia. I'm going to riff off, and I don't mean to use that as a pun here, but Nitin from the Responsible Inclusive Finance Facility, you a lot of your work and SPTF's work is around commitment, and there's this set of. Sorry, I think you're breaking up.
No, I'm here.
No.
Can you hear me?
Yes, now we can. Okay, great.
Okay.
So a lot of that work is around commitment, and you successfully navigated that in a market which has, surfaced some problems with consumer protection. So tell us a little bit more about how you managed it.
Okay. So thanks a lot for that question. I think it's important. I would say I'm looking for more honest commitment. I think that's very critical, and I'm jumping the gun, but that would be my wish list. So we'll come back to that. But the market has been very challenging, especially on consumer protection, and it's really tested the way we've been working and the tools that we offer for implementation of responsible inclusive financial practices. But we learned fast, and we learned on the move, and adapted what is commonly referred to as a market systems approach to try and meet these challenges. Now, under this approach, we've been working with all market system stakeholders, right? The BFIs, the investors, lenders, regulators, customers, credit bureau rating agencies, for example. So this is very much also the ecosystem. They're part of the DFS ecosystem as well. Now, our entry point in resolving all of this, resolving the consumer protection challenge via the associations. And this may, of course, differ. Very early stage and to improve was strong, but the ability needs more input, and options available were not always very clear to most stakeholders on the ground. So our work effort really involved in taking that willingness and juxtaposing it to the challenges and providing implementable solutions and options to the different stakeholders in the ecosystem. Our initial work effort really was just building trust and creating confidence, and that helps with the commitment also. So this was centered around helping people understand that we are a neutral agency that is really solutions oriented. And this was critical because the associations were under fire from nearly all quarters and were being branded as ineffective. But building trust was central to our approach. And this was really a function of understanding the skills gap of the different stakeholders, including the associations themselves, the language barriers, because English is not native in many of these markets, and also the historical context. These things really, really matter quite a bit. So with this as the base, we worked on three broad connected dimensions of client protection market systems, which is the supply side, the demand side, and the regulation. On the supply side, we are partnering with the associations and with strategic push from the National Bank to get shareholders and CEOs into a room for a day-long workshop on role of corporate governance and effective implementation of consumer protection. We have so far trained about or done a workshop with over 250 CEOs and shareholders, and more of these are scheduled. The workshop discussions have included a lot of the issues in the DFS ecosystem. For example, we've discussed lack of discussions at a board level on client digital skills at different segments. The inadequacies of a grievance redressal mechanism in the whole digital ecosystem. On regulation, we've supported self-regulation quite a bit. We've developed Cambodia-specific tools for monitoring consumer protection that has the buy-in from the BFIs, the associations, and the regulators. This has also elevated the Cambodia BFI sector code of conduct to the global standards of Series SPTF client protection pathway. And this effort really is a good example of being strategic in what we do and when we do an activity, because when the code of conduct was launched, the National Bank was very, very clear that they wanted BFI should demonstrate implementation. And we asked the associations and several BFIs how they're going to demonstrate this. And they were a bit of a loss. They were at a bit of a loss because the code of conduct was not really backed by measurable indicators. So we advise using the indicators of the global standard, as this would also help align the country code of conduct with the overall CP pathway global standards that are there. So this also helps avoid confusion in the market where you have two different codes of conducts that are operating, and also reduces costs for BFIs and investors. So the different stakeholders understood this very well. So this was very well received, and we now actually have a ready tool that the National Bank has also reviewed and acknowledged. And finally, on the demand side, the associations, along with the associations, the Credit Bureau, National Bank, and us, we are jointly working on piloting a consumer empowerment effort that hopes to really elevate or to bring client voices to the table, and also to better equip financial sector consumers on their rights and responsibilities. Our initial results from a similar pilot in the Philippines with the government and the empowerment course are either refusing multiple loans or paring down their loan amount demands after assessing needs and ability to repay. Overall, we find that there's a lot of value in discussing these issues and working jointly at a sector level across stakeholders, rather than just one BFI at a time and get the BFI level, so much of these efforts often gets concentrated. Our effort has helped really, I feel, to get multiple system stakeholders in understanding of the issues and the challenges, and a lot of cross-pollination necessary for an effective collaboration for responsible DFS ecosystem. On the issue of impact, of all of this, on that question, we believe that more there are, of course, there is the hard impact, which is the tools and the acceptance of the tools. For example, impact measured on the consumer empowerment project with a baseline and an end line, for example. But we also believe that more results will continue to unfold as the process, identifying and strengthening processes and purpose, rather than just arriving at desired results, in any process, in any way possible. So I'm going to stop here and, transfer the mic back to you.
No, and that's, I was going to ask you, where's the customer centricity, but you actually, mentioned that with bringing in the consumer voices and consumer empowerment at the end. So you've actually got all the 4 C's. But Eric, just to turn to you, what's a good principle that we can derive from the example that Nitin just provided? And, an additional question, in the previous case, you mentioned funding and the importance of that in the consumer association's case. But what is the prerequisite that that is required here to prepare the ecosystem for this kind of collaboration, really, that Nitin just described?
Well, yeah, that's a tricky one, your second question. I think it takes a lot of work.
we need Nitin to clone himself many times.
It's not going to happen by itself. Yeah, you definitely need, you need champions. That's very clear. I think, there are a couple of champions, for example, in Cambodia, who are really trying to fix things. You need hard work, from, SPTF and other actors involved, market facilitators for sure on the ground. You need funding, you need resources, definitely. And, some level, when I was talking about champions, it's also some level of commitment, which is, one of the C's, obviously. Now, on your first question, if I were going to try to find a principle for what was just described, and what I loved about Nitin's presentation is that really there is an effort to reach out to, all the different stakeholders, which is absolutely critical, because very often one of the most important person is not in the room. So how do we bring, this person in the room is something we need to think about. And, we're all talking as friends here, but we need to involve as many new people as possible in this discussion. United we stand, divided we fall, I guess. That's what was coming to my mind, you know, in the when Nitin was describing, you know, the situation. And I did Google it to check that it was not a political slogan. Hopefully not. Anyway, but yeah, I think it's really critical. You know, the role of industry association is critical, because one lesson we have learned in our work in the WEMU region, for example, is that it is sometimes difficult to get providers fully on board. So how do we do this? I still think, for me personally, this is a question I'm still asking myself on a daily basis. But I have a lot of hope also with these industry associations, and we've done a little bit of work at CGAP to identify, you know, the kind of work they're doing to promote responsible digital finance. And we have a few examples, and one that I find interesting is FinTech Indonesia, that has 370 members. They've developed a code of conduct for responsible financial technology operators in the financial sector. They have different codes on specific topics, on credit scoring, for example, on data protection. They're doing anti-fake, you know, FinTech campaigns, developing handbooks of personal finance, FinTechs. So I think if we need more private sector initiatives like this, and so I'm hoping we'll see more of this in the future, because they are a key element in this digital finance ecosystem.
Yeah, no, that's great. I like united we stand, divided we fall. Simone, I want to turn to you because you represent a really, really important stakeholder group, because supervisors obviously are core in ensuring responsibility, but they also have a lot to deal with in terms of just the proliferation of risks that we see with digitalization. So you're obviously doing a great job, and we know that you're building capability of supervisors through tech tools, but give us an example of what's really worked well as you work with supervisors in building sub-tech tools, and why did it work well?
Thank you so much for the question, Jasri, and thank you for having me. It's really a pleasure to be once again at Financial Inclusion Week. There is a lot that is working, and it's interesting because now working on innovation in consumer protection supervision is not a choice, I think is a need. Consumer protection supervision is not something established like financial stability, where there is also the support of a standard setting body like the Bank for International Settlements or Payments, IOSCO for securities. There's not such strength in consumer protection supervision, which is also somehow a new mandate for so many securities commissions and central banks alike, that they had to figure out how to build these departments with very limited budgeted and methodologies. So there is a lot of innovation happening. I can mention, for example, with the Cambridge Subtech Lab that I have the honor of leading at the University of Cambridge. It's the second iteration of what we started 7 years ago with the RegTech for Regulators Accelerator. And with R2A, the first prototype that we built was this chatbot and complaints management system that the Central Bank of the Philippines launched. So really changing, creating a new avenue for people to escalate their complaints that are not resolved by the financial providers to the supervisors. And on the back of that solution, there is a system that really analyzes all the type of complaints received through different channels by the central bank. That solution has been, I think, revolutionary, to be honest. It has been very important to democratize consumer protection in the country. It is now being scaled in Rwanda, Zambia, Ghana, Peru as a chatbot, Indonesia as a chatbot. So it's really something that is coming through as the first subtech tool that is a standard, is becoming a standard for financial authorities to have. And there are new versions of this chatbot. Through a project with the superintendency in Colombia, we came up with the idea, how can we build a similar solution, become white labeled, it scales down to the market so that the entry point for all complaints with whatever financial service provider is very similar, is consistent for the customers, and data can be received and analyzed from the moment the first level of complaints are raised with the financial services providers. Right now, we are prototyping 3 new solutions with Ghana, Indonesia, Philippines again, and Peru, mostly focusing on really a second generation of chatbots, introducing data scraping for web scraping, for social media scraping, for data sets scraping for consumer protection purposes. So the prototypes will be completed in December. We have already identified a new project with the Reserve Bank of India for a new prototype to develop in 2024, and it's about analyzing all the fintech apps that are in the stores, in the Google stores, in the app stores, and what are they respecting consumer protection regulations. There's so much that goes under the radar for financial supervisors. There is also so much demand for real training. So we have trained in the last 12 months about 200 financial sector supervisors with focus also on consumer protection, on the paradigm shift that there is on consumer protection due to the innovation in the market, due to data science. We introduced them to data science. We introduced them to human-centered design. So to design financial sector supervision with the customer in mind and the customer embedded in the methodologies. And we are doing TA in Egypt, Ecuador, Peru, Indonesia with OJK to really create a roadmap for the digital transformation of their consumer protection supervision departments, thinking really what is the suite of services or products of new software that can take financial consumer protection supervision to the next level. And this goes a lot into like the lack of capabilities that many supervisory authorities have on data science. So also the development for us of the hackathons, we've done one in August with in collaboration with AIR on the data that are embedded in the compliance data sets that are used by the central banks. We are looking for funds to launch another one in Q1 of next year on the discriminations that happen in credit due to algorithmic biases that are built, and how we can build a software or methodologies that are really modern and innovative for central banks to identify those biases and intervene. When Eric mentioned the example of Russia, no, it's fantastic that the Consumer Association was able to bring that issue to the attention of the central bank. But where was the central bank? Why the central bank was not able to identify those issues? What we want to take is these supervisors through a journey so that in a couple of years, we really see all over the world more activity and more smart intelligence coming to the consumer protection supervisors.
No, that's super helpful and interesting. And I love the fact that something that started in the Philippines, Bob, the chatbot, and how that's exported to other parts of the world. I did have a follow-up question for you though on just the differences in tech capabilities and consumer capabilities across different markets. You can export the tool, chatbot, but if consumers are not using it, or if you don't have capabilities to build that or scale it at, in various countries, how do we address that? And then I want to turn to Eric, because again, funding for this is coming up as a theme, but Simone, I was wondering if you have examples of how that was addressed.
The data from the Philippines are incredibly encouraging, and there are independent research that has been done by IPA, by other research centers that really, and also, the central bank sees that they've gone from receiving 300 complaints in a month to receiving 3,000. No? And there is a blog that I wrote recently about like the journey and the generation is not only about having more complaints, but having the right complaints, making sure that the supervisors spend their time on complaints that are related to their mandate to supervision, not because like the network is down. That's not something that the central bank can do much to fix, or some other issue. So more complaints, the democratization of the complaint system, but also better quality filtering system so that the few supervisors that are mandated to govern consumer protection can really put all their attention on those issues that are more risky, more affecting consumers. But yeah, the data is very encouraging in terms of the adoption of these new innovative channels. And I think there were also some important data in terms of gender balance. So many women are using these new tools.
That's great. Eric, comments on, what's the third principle perhaps from this? I'm putting you
Okay.
on the spot.
So yeah, no, that's okay. I'm used to that. Yeah, I think sort of be prepared to innovate because there is so much coming up so fast. I think, the kind of work that Simone presented with supervisors is really critical. All the training, all the capacity building, getting supervisors ready for innovation is absolutely critical. So be prepared would be the principle, I guess. Yeah, and I think that's, it's absolutely critical to pool more resources also, and I'm really advocating for this into training, capacity building for supervisors, how to use innovation. But innovation is not always technology, by the way. There is some innovation that doesn't require, AI, but still, we also need to prepare supervisors to use AI. We did something, very interesting, as you know, Jayshree, with the RBI Innovation Hub on using AI to better understand consumer risks in digital credit recently, using natural language processing. It's, you need engineers to pull this together, but once you have it, frankly, it's quite incredible what you can do with it. It's got limits. In this case, we couldn't, for example, differentiate women from men's experience with this tool, which was, a pity. But yeah, I think technology and AI are bringing a lot of risk for consumers, but also a lot of opportunities for regulators and supervisors. This being said, we also need to build, the basics, put the basics in place, because in some countries there is no basic framework for consumer protection, and that needs to come, early on. Because if there is no framework, you can have all the tools in place, it's really difficult. So I think we still need to prioritize also, building the framework for, regulations and supervision. And building the basics includes, building the capacity also, as Simone was illustrating.
If I may jump back in on what Eric is saying, on the other side, we also really need to do a lot of important work on the governance, regulation, and ethic of AI. There is a new world that is opening up to us. We are publishing this week a blog series on artificial intelligence. We will go on in a couple of weeks with a blog series on consumer protection. But there are issues around the new regulations that have been proposed, for example, in the US and the European Union, that will affect, first, how AI is used in the financial sector, and second, how AI is used for financial sector supervision. And that's really something that we need to make sure we reflect upon. Not only, also the new rules, for example, around how technology companies like X, former Twitter, or Meta allow scraping or not of their data are fundamental, because we definitely don't want surveillance, but we do want intelligence. And so being able to distinguish how governments, how the private sector is using this data, this customer data, becomes critical for us to step into this new era, providing the public sector with the right tools to support consumers.
Yeah, Jayshree, also build on to that. I did like when Eric did say innovation is not just tech, because we've seen from some of the discussions, sometimes it's the issue of how do we engage? Are we still using the old methods to solve new problems? So it's good to hear that Nitin and Simone, for all the projects that we've all said, there is a component of capacity building, whether it's tailored trainings for consumers like we do with the FDFA, whether it's for regulators, whether it's for CEOs. So how, at the end of the day, how do we even within ourselves come together to ensure these skills can now translate into something tangible? I know for some of the, we've seen examples from the Federal Competition and Consumer Protection Commission of Nigeria and RBI coming up quickly with interim guidelines on, let's say, predatory loan apps. We're seeing countries like Australia, New Zealand, trying to come up also with frameworks around buy now, pay later services. And we're seeing more engagement overall from regulators and even business, especially the aggregating bodies, inviting the consumer voice more into the into places or convenings where they did not there before. So within just that span of time, we've seen, for example, the GSMA this year has been very proactive in ensuring that most of the convenings they have, there is consumer representation there, whether it's around consumer risks or it's around activities that consumers are doing that could elevate the work that they're doing. But there is more to be done, of course, individually with the businesses. But we are seeing progress, like within the year from when we started to where we are now, just being in the right spaces, trying to leverage each other's activities to spur on better outcomes for consumers have all been excellent. And I can't wait to see the outcomes of our state of financial consumer experience this year, to see changes that have happened from where we started, whether it's new risks or new frameworks or new engagements that are coming up that are leading to better outcomes for consumers.
That's great. I'm going to ask the audience to pose any questions that they have, because we have, I think, 10 or 15 minutes left towards the end of the session. But I do want to come back. I think these are great examples of how the responsible digital finance ecosystem can come alive. But like we said at the start, the ecosystem is larger. So there are obviously many, many other stakeholders that need to be involved in this collective effort. So what is, this is Financial Inclusion Week. So what is a wish list that you all have for the inclusive finance community? What needs to be done? How can we make this happen? And I'm going to add another question, which is, are there trade-offs that we should consider? Because Greta today in her keynote mentioned impact before growth. What does that mean for investors seeking short-term exit horizons? Is that a trade-off that needs to be factored in as we think about building an RDFE? And anybody can jump in any order.
Well, my first reaction to this, Jayshree, is that consumer protection should no longer be considered as a luxury, but as a prerequisite for financial inclusion to expand in a meaningful manner. And when I say in a meaningful manner, there's increasing discussion globally on, yes, we've done great as an international community to promote access to financial services, to some extent usage, but at the same time we're seeing issues of trusts growing. In India, for example, there is a large proportion of people who have access to formal financial services who don't use them. It's more than 30%. And 50% of these people don't use them because they don't trust the service. So we are increasingly realizing that with better consumer protection, with more responsible financial services, it's the only way we can really expand financial inclusion. And meaningful means that consumers gain something out of the usage of financial services, that it serves their purpose, that it's fair, and that it doesn't put them in a lesser good situation than before they use the financial services, for sure.
Sheila, go ahead. You have your mic.
I'd say my wish list would be sort of linked as well to Eric's, around having formal consultative status for consumer representation in business engagements, in policy determinations, and in all these conversations where consumer issues are being discussed. And as long as that's happening, I believe that with the entire ecosystem coming together in play, we can be able to balance the urgency around solutions for consumers, while also ensuring that consumers benefit from the innovations that are coming up, because these are wonderful innovations. They are ensuring that consumers previously excluded are now included. We are seeing new ways of doing things that are really helpful for consumers, but unless we all come together to ensure that we are using our unique skills to solve the issues that we are seeing, then we shall always keep having that trade-off, which could easily be reduced through collaboration. So I would say there is that, and of course, we always need funding. We've seen the civil society is really, really underfunded, and even governments in some of the countries which have been supporting that with changes in government, usually you see some of them losing funding or taking away funding from consumer-related issues to other places. And yet this is the center of everything that happens. If consumers trust the system, if consumers are happy, then it means that even the business part will be very happy, and the regulators will be able to easily monitor or implement regulations because of the collaboration and unique advantages that the different players bring. So for me, those would be the two that I would really put out there.
Mm-hmm.
So can I go? Or
Sure.
Yeah. Okay, thanks. So I think, yeah, resources definitely. It's sapping, both in terms of human resources and financial resources, this work. So that's a definite big wish list. Honest commitment is important, right? Associations need to, yes, their members are BFIs, but it can't always be defending the indefensible. So I think honest commitment is very, very critical. And I think it's very important for each stakeholder to really rethink how they're working. Yeah. All of this has happened because we've really started to rethink how we are working. We were very sort of, demand driven, earlier on, wait for an application to come in, you fund it, but, we've completely flipped that around now. Right. So we really need to reorient in terms of how we are thinking about all of this, because if it's not a luxury, as Eric was saying, then that reorientation needs to happen, right? Because effort is needed over there. But I think that reorientation has to also happen a lot at the investor and the lender level, right? They really need to reorient themselves in terms of how they're thinking about due diligences, right? When it comes to who to invest, who's responsible, how to identify who's responsible. So looking at due diligences, looking at reporting that they're receiving on a regular basis, and also what happens if one of their partners, say, there is, for example, we're working on DFS standards now, right? And if there's a certification program, then what happens if one of their partners fails a certification? What's the action to be taken? Right. In June, we did a simple survey and found that really only 30% of the investors, had some sort of strategy in place to tackle this sort of a situation. 70% didn't really have it. So there's a lot of reorientation on part of investors and lenders that really needs to happen. Our concern now in the market in Cambodia is responsible exits, by the way. Right, because that will shake things up even more. So yeah, that would be my wish list.
That was great, thank you. Simone, last but not least.
Well, I mean, at the ecosystem level, we've been reflecting for quite some time on like how do we create tools that can more directly support consumers as well. A few years ago, we published a paper called The Data Stack, and in that paper, the central idea is that financial authorities are sitting at the center of a data ecosystem that it's not been exploited enough for supervision and has not been exploited at all for consumer empowerment, consumer literacy in the sense of understanding products, understanding risk, understanding who is complying and who's not in the market with the regulations, with code of conduct. So I think there is a big piece of work that it's possible to do to really look at public data or at central banks' data and other data in the ecosystem that can be repurposed to provide more intelligence, more insights for consumers to make their choices. Another thing that is happening in the financial sector that we clearly need to take into consideration is open finance and open banking that will change the power of consumers. Like the Center for Alternative Finance is launching a training again for supervisors and regulators on those topics, is launching a major project in Indonesia on those two teams. So that's something that we at Cambridge are looking at closely because it can be a game changer in the power play between consumers and providers.
No, that's great. We have actually a great question from Colin from the audience, which is, he says, as the DFS ecosystem becomes more complex and it becomes less clear to consumers who the stakeholders are in providing services, how do we ensure that those stakeholders maintain responsibility? And I think he's referring to the embedded finance players who often fall between these regulatory gaps because So anybody or everybody.
I can jump in. I mean, Colin, you're absolutely right. That's why we talk about a paradigm shift in financial supervision and in financial consumer protection supervision. Until a few years ago, it was clear for the supervisors who they were supervising, who was accountable. There was not much accountability, but at least the clarity about who was accountable. The clarity is no longer available in some cases because of the decentralized finance, because of embedded finance. So now there are multiple players that need to be responsible for how they are providing the services for the different pieces of the relationship with the customer. And in some cases, really, there's no mandate even to be able to monitor, to oversee what they're doing. So there is the need to rethink consumer protection supervision based on embedded supervision. We spend a lot of time on this during our trainings with supervisors, because really we take the frameworks, for example, created by CGAP, by the World Bank, and say, what do you do now when you have embedded finance? How do you supervise this, and how technology can help you? Because the capacities, the capabilities are limited, the resources are limited. So the financial sector is expanding, is becoming more complex. And I totally agree when we say that innovation is not only technology, but technology is absolutely needed to have the analysis of this mass amount of data, new business models. Otherwise, it's very, very hard to keep pace for the public agencies.
Yeah, Simone, that also brings in the role that consumer associations play at that point, because we've had lots of issues where we get complaints, and most of the regulators, there is no one who is mandated, or within that moment, there is no one that's mandated to solve the issue. So it's then brings in the role of a higher convening power that can bring all this data to say, this is the evidence we are seeing, and be able to coordinate the different mandated authorities until they come to some kind of agreement to have solutions for consumers. Otherwise, it's very easy for all the different regulators to just say they are not mandated. And usually these are low income or consumers that don't have the capacity to follow through. So the large numbers or the convening role of consumer associations then comes in very, very handy in such situations.
Yeah, to complement all this, I think, Simone raised a very important point, which is data, obviously, and, open finance and all this. As I said, earlier on in the discussion, for me, there is a very important consideration about consumer data and other data.
Mm-hmm.
There are many kinds of data, but for me, what worries me the most is the use and the misuse of consumer data. So when we think about, open finance and all these, new fantastic opportunities to use for people's data trails, it's also very important to have some collaboration between consumer protection authorities and data protection authorities, because that's where it becomes, how to keep that opportunity alive is also, ensuring that consumers are really well protected. So, but also in terms of Colin's question, I think there is, what we're going to see is that some of the new players are legitimate, but other players are not so legitimate and are under the regulatory radar. So what are we going to do with those? I mean, for me, for sure, you need, rules in place for the financial sector and for everybody who works in the financial sector and provides financial services formally. And then you need enforcement. So, these are two absolutely essential aspects. And then sometimes you need a sandbox, or some other mechanism to think about when it's time to regulate and when it's time to supervise. I mean, one example in my own country, in France, where you have cars in the street, you have bicycles, and then you had scooters that came in. The problem is that the scooters killed so many people that then the French decide, okay, the scooters are no longer allowed, basically, or the scooter, rental, or the rental of scooters are no longer allowed. So at some stage, there are some green lights and some red lights that need to be put in place. And what we've seen in India, for example, is that there are a lot of legitimate digital credit providers, but there are also illegitimate credit providers. So then the work is about how do you close them down, maybe in collaboration with Google. I think we're going to see new types of collaboration for the regulator and the supervisor to have the capacity to continue to regulate the market with so many new entrants in the system. And I think with AI, we'll have even more new entrants.
Nathan, any last comments? I think we have 1 minute left. So,
well, I think this is actually very, very interesting and important.
you're breaking up, Nathan.
We are seeing a lot of risks. Can you hear me? Can you hear me?
Well, on and off, you kind of zoom in and out.
Okay. I think my connection is not too stable.
Yeah. Well, it's unfortunate, but we will circle back to you. I have to close this session. I just want to close by saying thank you to everybody. I do have a wish list, which is, this is a new concept. And I think as it evolves, I'd like to see consumer outcomes being, measured more accurately. I want to see evidence. I want to see a reduction in some of these consumer complaints, at least the ones that we've heard over and over again, because I think it's high time we addressed it. But thank you so much for spending your time and all these resources that you provided. And I look forward to interacting with each of you over this year.
Thank you, Jayshree. Thank you, everybody.
Thank you,
Have a nice
Jayshree.
day.
Thank you, everyone. Bye-bye.